After backing itself into a corner, the Fed has spoken. Now what? Lots to talk about. Sit back. Let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion than that of Wall Street and Big TV, please do consider subscribing. So yesterday was the big day, Fed Day, highly anticipated, first rate cut in 10 years. I'm in the camp that they didn't need to do that. Scott Minerd said the same thing on Bloomberg. The Fed might not cut rates more than once. This is Bill Dudley, very interesting. So what happened? When you look at yesterday, or this morning, economists who predicted the rate cut are now utterly confused what the Fed does next. That's crazy, right? And the whole point is that the markets like to know what's going on. It's good to have transparency if you give us a direction, which he did not. Let's go through a couple things. We are thinking this as just a mid-cycle adjustment to policy. What? On the future path of what's now expected as many rate cuts, he says they're in a wait and see mode. Wait for what? Tell us what your next move is, what you're looking for. These are notes I took down. As the year began, the economy and monetary policy were in a good place. If they were, how come on January 4th you came out and changed everything that you were talking about? The big statement, this cut is different from the start of a lengthy cutting cycle. Boom, the market went down. Wait a second, that's the one and done concept. Fast forward 20 minutes, market's down 400 plus. Reporter asked, I didn't say it was just one rate cut, and the Dow claws back. So really, total confusion. Who knows what's going on? They said it was going to be an insurance cut, but it's not. We don't know what it all means. This morning the market's up because now the market thinks he's going to do more cutting, which I don't believe is the case. So next up, let's talk about today's agenda. Big charts, signals, Treasury, what keeps me up at night, on my radar, and game plan going forward. Let's go to the big chart. Okay, first up we have our daily view. What are we seeing? Very muddled. A couple things from yesterday. We've got the VIX up to 14, have been hovering around 12. So that's interesting to see. We've had about a 30% rise in the VIX in the last week. The other thing, when you look here, right, we hit all-time highs, and this is momentum going the opposite direction. That's a negative divergence. Don't like that at all, okay? When you see what's happening, the other thing is sell days, higher volume. We see it yesterday, a couple other days. All in all, right now on my signals, I am neutral, short term, with a negative bias. Want to see where we go. Next up, we have the weekly chart. And what do we see here? I added this beforehand. That is a distinct wedge. Can we break above that? To be determined, right, by the end of this week. But overall, and you can see it on a close-in there, momentum is still positive, which puts us in a positive signal for the midterm. Now, thought I would get a change here as it pertains to monthly. Didn't get it with yesterday's slide. So what do we see that's anything different? One, point out the same thing, right? Markets go to all-time highs. And look at that negative divergence. That's really a problem. That just tells me there's no strength behind the underlying markets, okay? The other thing I was looking for was a momentum crossover. Not quite. Did we get it? So what I wanted to do was I added in another chart down at the bottom. It's called PMO, price momentum. And you can see down here, actually when I moved it, it's circled. It's still not positive. So Again, I am neutral right now on the long-term view based on what I see here. Next up, let's talk about treasuries. Okay, so after yesterday's Fed meeting, we had some big moves in treasuries. Why? Because the Fed wasn't dovish enough, which is what we were anticipating. So we saw the short end go up, right? And then the long end went down. So what does that do? It's going to compress things. Okay, I go down the bottom here. The big thing is 10-year minus 2-year. 10-year treasury minus 2-year. We are now at 0.13. Big move to the downside yesterday. You can see it right here. But on the 10 minus 3 month, we're now down to negative 0.06, okay? So why is this important for anyone who's new? Because when you look at an inverted yield curve, 10 minus 2, here's in previous recessions. Recessions are in red. Each time we've gone below, we are entering a recession. And clearly, the bond market has been telling us something very different from the overall markets. When we invert, it's usually 6 to 12 months. So I don't foresee a recession short term, but we are going to continue to watch this. Next up, what keeps me up at night? Lots of things keep me up at night. Right now, obviously the markets, but when you look at this here, this is the transports. This morning, we got another negative manufacturing number, another contraction. We peaked in September, another lower number, 51. Below 50 is contraction. Have not seen that in a while. So if we're not manufacturing more goods, it's going to affect transportation. That's what I want to do here. We're still down 10% from our highs, okay, in transports. That's an issue that we'll continue to watch. Next up, let's talk about some of the big overseas markets. China, right? It's all about tariffs. Well, that's been pushed back, if it ever happens. Okay, they peaked last year. I mean, they're down, okay, 20%. They're in a bear market right now. That's an issue. Also in that region, you can look at South Korea. They're down 20%, okay, in a bear market. That's an issue, okay? And then last but not least, I look at Germany, one of the big outputs in the European market, and they're down about 10% from their highs still. There is the slowing, global slowing. We are not synchronized, and last week, Draghi came out, talked about they're going to do again whatever they need to. So if they cut, we're really on the other side of that, and you can see that in the US dollar that hit a 2-year high yesterday. So some of the other data, the fundamental, right? We talked about some technicals on the what keeps me up at night. So here's personal income, which has gone up. That's a good thing, right? But when you look at where we are in the cycle, okay, when earnings are going down, we've gone from 24.12, 2% growth quarter over quarter last quarter, and we're at 3.5%, which is actually surprisingly better than we'd anticipated. But you've got rising income and lower profits. That's an issue. GDP, looking at a 1.3 forecast, okay, for the quarter we're in right now. Second quarter, a concern. We came out with a better than expected number in the first quarter. How could that be? Look at this number here. 5% growth quarter over quarter on government spending. Wait, this administration is about small government. That is the largest increase since 2009, and that really helped drive GDP last quarter. I am not always Mr. Negative. Consumer confidence hit a big number the other day. And then negative, speaking of me being negative, negative yielding bonds, $14 trillion. And it's interesting, good article, you can Google this or I have a link below. Negative yields could be the death of the bond markets. I mean, at some point, how long can investors go on pretending that sub-zero interest rates are normal? I say this all the time. Think of it this way. You're mowing someone's lawn. You go say to them, hey, I'm going to mow your lawn and pay you $10. What do you think? Pretty stupid, right? That's what's happening. You're giving these governments your money. I mean, Germany right now is negative 0.44. and you're not making any money on that. That is crazy. Next up, what's on my radar? So when we look at what's on my radar, today my portfolio looks very different from in the past. Part of the reason is we've been overweight in sectors that are based on or linked to low treasury rates. That's a call we made back in November that worked out really well. We felt that treasuries were going to go down. So you could talk about REITs, utilities, and some other sectors. Another sector that does really well in this part of the cycle is healthcare. Now, it's been staggering along, not uncommon. You see here it went sideways for a while, and then we saw a breakout, and we're kind of in a sideways consolidation. I do like that for new clients. To me, that looks like a pretty decent opportunity. You know, big question, I get it all the time, is gold. What do we do about gold? Well, yesterday created a buying opportunity for what I discussed. So at first, again, the long end on the treasuries went up, US dollar got strong, and gold got hit yesterday. To me, that's an opportunity. You look to buy gold when we have some pullbacks. Why? I mean, clearly, you're in or out of gold, or at least I am, and right now we're in. And one of the reasons is we follow that. Golden cross, death cross. We had our golden cross. We actually got back in November pretty early, about 5%. We're carrying between 7 and 8% right now. Gold volatility is pretty low. After the pullback, we're starting to point up again in the momentum. I like that. And then you'll see, down here is gold relative to the S&P. So performance, right? Who's performing better? And you can see, I mean, over time, obviously, when you look at the markets, right, didn't do well. Now, it's kind of grinding higher as it relates to the S&P. And you can see that, let me click right here. Here's most of our sectors, and this is last month in July. The S&P ended up just 0.5%. Large value was flat. Those are our two sectors, growth that we're in right now. Gold was up 3.5 last month. Utilities flat. REITs up 1.8. Communication services 2.25. Consumer staples almost 2%. And then home construction 0.5%. So all of these interest rate sensitive, late cycle, defensive sectors continue to do very well. And that's one of the reasons why we are overweight there. So let's wrap things up with our game plan and fear and greed. Fear and greed, link below on how these numbers come together, but not surprising. Neutral, just like I am right now. One positive, two neutral signals. Game plan going forward. I'm sitting on about 7% cash right now, waiting for a place to put it. Looking for, do we break out? Do we break down? I don't know. Are there any opportunities out there? Have been looking at how do we play the US dollar being so strong, looking at European companies that derive a lot of profits over here. So we'll see. Right now, definitively a neutral signal, which I do update every Monday on Facebook. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.